The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum. Investing in Jamaica.
Good afternoon, ladies and gentlemen. I'd like to welcome you to yet another investor briefing. I'm your host, Dan Theox, Senior Vice President of Investment Banking. Today, we'll bring you a special feature with two results, that of Mayberry Jamaican Equities and of Mayberry Group Limited, both their Q2 results. Joining me today are our Executive Chairman, Christopher Berry. Welcome, Mr. Berry.
Welcome, Dan.
And also
welcome, everybody.
Thank you, Mr. Berry. Also joining us is none other than CEO Gary Parrott. Welcome, Mr. Parrott.
Hi, everybody.
He's also the investment manager and representative for MJE. Welcome, gents. Looks like you both are off in another land. We'll talk a little bit more about that as we get going. Folks, remember to stick around for our Q&A segment. And at the end of the program, Chris and Gary will be answering your questions. If you're a fan of the content, be sure to give us a like and subscribe to the channel. We upload videos just like this every week. Before we get started, if you're looking to expand your portfolio or embark on your very first investment journey, Mayberry can place you on track to financial freedom. I like the placing you on track, especially coming up to Olympics. Follow us on social media at Mayberry INVJA to learn more. Now let's look at these results. So we've got MGL and MJE. Chris and Gary, where are you two gentlemen, if you don't mind me asking?
Well, I'm actually helping to cheer on the Jamaican team in France, Paris.
Ah, parlez-vous français?
Yeah, whatever that means.
Do you speak French? Executive Chairman, looks like you're somewhere nearby, Mr. Parrott.
Actually, I'm just a little bit across the pond in Amsterdam.
Amsterdam, very good. Congratulations. I've been there, a lovely place. Well, speaking of lovely folks, I want to get right into it and look at the MJE financial results for their second quarter ended June 2024. And spoiler alert, I'll go right to the bottom. They had total comprehensive income of $922 million for the quarter, compared to $367 million same time last year. So that's 150% improvement. But let me take my time and work through the numbers. Net operating income was $842 million from the quarter, compared to only $8.7 million same period last year. Operating expenses retracted to $44 million, down 15%. That resulted in a profit before taxation of $799 million compared to a loss last year. Additionally, they had other comprehensive income of $123 million. And when you put that all together, that results in the $922.9 million of total comprehensive income for the quarter, with an earning per share of $0.67 or 67 cents. Next slide shows what's happening on the balance sheet side. And the year-end audit was December 2023, so we're going to just focus on the improvements in the balance sheet for the half year since the year-end. And first up, we can see that the total assets are up by 2.8% or $695 million to 25.2 billion Jamaican dollars, while the liabilities have grown to $7.8 billion. Shareholders' equity grew from $17.3 billion to roughly $17.4 billion. So the company really has a good amount of reserves and equity. And that total shareholders' equity divided by the number of shares is what gives you the NAV, or the net book value per share, which is $14.47. So they've grown the net asset value from 14.40 to 14.47 over the last 6 months. And so that's a great performance there. And I expect nothing but further and improved growth as interest rates start to trend down and we expect PE prices to start to fly. Next slide shows top 5 additions and top 5 disposals of note. During the quarter, we see them buying more SVL, more NCB, more dollar, topping up on Wigton and Jamaica Broilers Group. Also during the period, we see them selling the same Q2 2024, selling a little bit of JBG, a little bit of Dermont, General Accident, Lasty, and a small amount of dollar. So net for the quarter, we can see that they're increasing their exposure to NCB and dollar in particular. Also to Wigton, buying about $30 million more of Wigton. And these 5 companies, I think you'll see as a permanent feature of MJE, SVL itself being one of the main positions that MJE has. And we'll definitely talk about these 5 companies in one way, shape, or form during the program. Next slide shows the comparison of that NAV, the net asset value of $14.47, to the current share price, which is down to $9.03 compared to $11.22 last year. Also, you can appreciate that the NAV continues to be about 50% richer than the share price. And whenever you, as Gary Parrott has said to us in the past, whenever you see the net asset value of the business being substantially higher than the share price, that's signaling to you that it's a good time to buy the stock. There is no true logical reason why the share price should be below the net asset value. In fact, the net asset value speaks to sort of the breakup value of the business, and we often see shares trading at a premium to book because of the PE ratios. So here is a very unique opportunity. There are not more than 2 or 3 on the stock market where you see a stock that's trading at over a 40% discount to its book value. And that for sure, to me, says it's a great time to go buying some MGE because, as I said before, that total asset value of $25 billion is only going to improve substantially over the next 6 months as interest rates trend down and as those top 5 entities we just mentioned come into stride. All 5 of them I fully expect to be doing substantially better in the next 6 to 12 months. That's SVL, NCB, Dollar, Wigton, and Jamaica Broilers Group. And I could deep dive on all 5 of them, and we'll jump into those questions as we go on. So that is the results in a nutshell. Congratulations to you, Mr. Berry and Mr. Parrott, for that Q2 performance, which delivered $922 million of bottom line performance to shareholders, increasing total equity position now to approximately $17.4 billion. Guys, you will not find another fund out there, another ETF, another holding company in the market that's focused on Jamaican equities with $17.4 billion in reserves, retained earnings. Doesn't exist. Okay, so Mr. Berry, Mr. Parrott, we have a few questions for you guys. I want to jump through them before we move on to the MGL. So first up one for me, Mr. Berry. I'm going to start with the hard questions first. Sir, so we know we're looking at the June 30th results. We saw the approximately $920 million gain, but there's, a very big notice that was given in the first week of July by MJE. It says you sold your 20% position in CPJ. And for those of us who can do good math, we can see, what price you sold those shares for. It's public information. It's obvious that you sold them for $10.50. And by my math, at the end of June, the stock was trading at $9. So what does this mean, Mr. Berry? By my math, you collected over $2.3 billion for the sale of your CPJ shares. So first question for me, why did you sell CPJ shares? What's that gain looking like? And what does it mean for MJE? Hard question coming out of the block firing.
Okay. I think the biggest issue is firstly, I would say that, as you rightly said, we sold at $10.50, and at the end of the quarter, I think it was trading just around $9. So there's an extra $1.50 in there per share. That's wouldn't be in the June results in terms of additional gain times the number of shares. The issue of why is a very good question. But basically, when we invest in companies, the main thing is where we're involved or we can be involved. We try to help the companies to grow. And based on where we were with CPJ, we felt that we couldn't help them anymore. And that the opportunity for the company to be a part of the new group, which has purchased them, is a much better opportunity in terms of expanding the platform for that company. So we took them as far as we could. And now it's time to hand over to new folks. And you have to appreciate that this is the way the deal was done. It's a significant change in the management and control of the company. And they will still benefit from the expertise of the previous owners, but now you have someone else calling the shots. And we think it's going to be great for the company, and they're going to continue to grow and expand. And that's the way we like to see it. We like to hand over the baton so that the company can keep moving forward.
Thank you for that, Mr. Berry. And for those naysayers who love to talk about the Jamaican stock market and the liquidity challenges, etc., one of the biggest problems we have at Mayberry, because Mayberry helped broker this transaction, and again, it's public information. This was a sale by top 5 shareholders of CPJ of 44% interest in CPJ to AS Bryden. And what we like doing is growing companies and having this problem. That's an over $5 billion deal, folks. We like having this problem when we're trying to do a $5 to $10 billion share transaction. And you have those folks out there who don't think it's possible. And so I want to remind you that it's very possible. It's a good problem that we had, and what we've done is found great partners in the form of A.S. Bryden Group with the likes of P.B. Scott, Nick Scott, and Richard Pandui, and there are great synergies between A.S. Bryden and CPJ. So I was in love with the transaction at the execution level, being a broker and advisor on the transaction. And I think it gives MJE a good exit, and we took note of the Berries resigning as directors from CPJ to make way for new directors to come and take that business to the next level. But congratulations to P.B. Scott and the team, and to Christopher Berry, Gary Parrott and the team, because it's a great deal. And I think at the end of the day, that we're all winners. To Mark Hart, Tom Tyler, thanks for your invaluable contributions to grow CPJ to where it is. And we look forward to continued growth in CPJ under the leadership now of A.S. Bryden. So great transaction. Mr. Berry, again.
And Dan,
yes, sir.
Don't forget Mark Berry, director of CPJ.
Oh, absolutely. I did say the Berries, that is to say Mark Berry and Christopher Berry both resigned as directors from CPJ, and contributions, I think the invaluable contributions that you guys made over the last 7-8 years are what helped take this stock to where it is. And we think CPJ is now in great hands on a great trajectory. So we appreciate the entire team. It was great doing business with you, PV. We look forward to doing more deals. And so by my math, that's another $300 million gain that was made in the month of July. Folks, you all will see those rolling through in the Q3 results of MJE. And for now, we say bye-bye to CPJ, but I promise you we'll have lots of great deals, bigger and better to come in the future for MJE. Next question for me is...
Before you move on, Dan.
Yes, please. Go ahead, Gary.
I just want to add to the 2 key points you and Chris spoke to. It's just to remind potential shareholders of MJE, simply because the feedback that we've gotten over time is that, there are some shareholders that does not give credit to the unrealized gains that MJE books. Yeah. And so the first point I want to make on that is, when we crystallize the transaction in the way we have, that unrealized gain that has been carried in our books for some time, we've now realized that. So that actual cash is now in our hand. So the beautiful thing with mark to market is that we mark to market at $9, so we showed the gain to $9. As you pointed out, the transaction was done at $10.50, so there's another approximately $1.50 to come. We owned over 200 million shares. You can do the math as to what it works out to be. And so what you're seeing is that we have now moved from an accounting perspective those gains from unrealized to realized. So we have that hard cash. So I just want to blow away that first myth, where people keep saying, oh, it's just paper. No, guys, we've converted it to hard raw cash. And when we make these announcements, you can't get the stock, so if you're not there before, you can't benefit. That's one. Two, there's an argument that because of the size of the positions that MJE holds, there's this mistaken belief that, when we want to exit a position, we have to exit a position at a discount to what we hold those shares are, or a discount of where the market is. So, I want those potential shareholders to take note because the existing shareholders know this already, which is why they're already in the stock then. That, here it is that we have made an exit, and the exit was done at a premium to where the market was trading. So the market was trading at $9, and we exited at $10.50. So again, if people are used to how other people give discounts, we're just saying with Mayberry and MGE, it's a totally different argument, right? We understand the positions that we have, and more importantly, we understand how to lock in the premium for the positions that we have, unlike maybe some other people. So I just wanted to make there's two very clear points that, don't just watch the unrealized, because when we realize it might be too late for you to move, one. And two, take note, we also have more companies to go, right? And so if people keep thinking, because remember, they're trading this stock at about 20 to 25 discount to NAV. And we're sending a very clear message to the market. There's no reason for you to be trading our stock at a 25% discount. As a matter of fact, you should be trading this stock at a premium to its NAV, because once again, we have demonstrated that we can sell at a premium to market. So we throw it out there. I know my existing shareholders know this. They know that we will always realize more than that market value. And as I said, everything we have in MJE is for sale. So don't be on the wrong side when those sales occur.
Absolutely. Thank you for that, Gary. And again, I want to sort of reiterate, it's public information. We did this deal at $10.50. It's over $5 billion deal, and that was a 17% premium to the share price. So again, it's really weird to me that the stock's trading at a 30% discount to the NAV, as if people don't believe the market values that we're carrying are real. You know what I mean?
Yeah, but think about it, Dan. Sorry to cut you, but
Sure.
think about it, right? So we got a 17% premium to market, right? And for shareholders, who don't want to buy at a 30% discount, you're giving up almost, 50% in
crazy,
value.
Crazy.
No, it's crazy for them. I mean, we continue to buy, right?
Absolutely.
So, I mean, if you can buy these shares at almost, so in the case of CPJ, if you had bought MJE, you'd have gotten CPJ at a 50% discount.
Absolutely.
Relative to the size of the deal.
Absolutely. So, yep, no, great.
That's why we keep saying it, Dan. MJE, the only stock you need to own.
Absolutely. And I see, questions starting to come in. People are honing in on what we have in the portfolio, and that's why we like showing them the top 5 editions, because we try to give them a little peek at to what we're up to. And so my second question would be, guys, around dollar financials, Gary, and we see that you guys increased your position in dollar financials again recently. So now the group effectively owns more than 20% of dollar. And, I'm just trying to understand where your headspace is there. What do you guys like so much about dollar? At $2.60, I think it's a $4 stock in 12 months. We just did a review of dollar, but forget what I just said. I mean, what is it that you like about dollar so much, why you guys continue to put effort into it. You now have board seats that you're trying to take control of as soon as those are approved by the Bank of Jamaica. So it's clear to me that you guys are sort of deepening your position into dollar. Hey, what's up with that?
So the first clarification, Dan, that I would like to make is that the Mayberry Group effectively owns less than 20% of dollar. It's not to say that if we don't get the opportunity, we would not try to increase our position. But at this point in time, effectively the Mayberry Group owns less than 20% and so on. Two, as we've said, we took the position because dollar is one of the fastest growing microfinance companies out there. If you're to do a comparison, to a company that is on the face of it larger, the person that buy assets have a larger company. They have 2 times the loan book, but dollar generates a profit that is 2 times bigger than what they're generating. So that gives you an idea of cheese to chop in terms of where dollar is going. They have a very not just aggressive set of managers, but in terms of how they manage the business, in terms of risk, etc. We're pretty impressed with it. So Kenra and the team, Trevine, etc. We're very, very proud and impressed with how they're running that business. We expect bigger things from them. Trees don't grow through the sky, but there's a lot of potential out there for that particular company in microfinance. So we will continue if we get the opportunity to buy more shares at a good price. It's certainly something that we would consider. But I think where we are, I think if you look on the numbers for the first 6 months, one may argue that we're trading now maybe at a discount to where I think the true value is. But I'll leave it to the market to make the determination.
Yep, agreed. Good deal. So I'm taking a few questions from social media here now, since we're going to roll over into MGL afterwards. But I just want to spend 5 minutes and capture these questions because the questions are pretty interesting. So 2 questions. Gary, Chris, I'll let you guys decide. Did you participate in the NCB APO? Do you believe the APO was overpriced? So those both questions coming in from Limitless Podcast.
So
the question is, that has nothing to do with MJE, does it? That's a question about NCB.
No, it's asking, did you participate in the APO, and then do you think it was overpriced? So I guess they wanted to find out if MJE took up any NCB shares in the APO, I guess is the question. Do you think it was? How do you feel about the pricing of the APO?
So we couldn't take up any shares in the APO because we were at our limit. So we have internal limits for each different stock, and based on where we were in terms of how much NCB we had before the APO and how much cash we had and loans, we were at our limit for that stock, so we couldn't participate in the APO.
Good deal. And do either of the gentlemen care to comment about whether you think it was overpriced?
No, pricing is relative, and I think the price that was chosen, relative to where the market sentiment was, it's easy to make an argument that the pricing might have been a little rich. But if you look on the price in the APO relative to what the true value of that company is, I think 65, in my opinion, would be undervalued. The fact of the matter is that negative sentiment has continued. The stock has trended down to $50 odd. So, those who didn't take up in the APO, obviously, if they choose to buy now, they have gotten a better price. But one of the things about experience, Dan, and we have a lot of them, we have a lot of that in the room here, and especially with Mayberry, I don't know, another 30, 40 years of experience. We've been there, we've done that, and we've seen it. And the simple reality is that, I believe the market is waiting for a signal to say, hey, the worst is over. And what we've always found is that by the time that signal comes, the stock is just going to gap up so quickly, you won't be able to get material amounts of shares, and I would not be surprised if you see the same thing happen with NCB. So you'll have a situation where you can get any amount of stock between 50 to 54, and then tomorrow morning you get some numbers or something occurs, and in a blink of an eye, literally 2-3 days, the stock is at $80. So it's something for investors to make a reminder about. But I'll remind people again why MJE is the only stock you need to own, because when you have a business like this where you can pick up the shares at this price, if you understand this market, it can get illiquid, it can get irrational, right? But if you have the liquidity and you're able to withstand those two things, you'll make significant return, So I think NCB at $50 is a buy every day of the week. But people may differ. And as I said, you get in a nice dividend, and you have the potential for significant capital upside.
Yeah,
but let's see.
Yep, I'm inclined to agree, and I look forward to seeing their results come out by August 15th. If they can do better than $3.5–4 billion, I think the share price will move immediately. So we look forward to seeing the NCB results. Okay, another question coming in is is Mayberry planning to go for control of dollar? So if we were, I don't think we would say it here, guys. I don't think that's sort of our intention. That's not our style of investing. Our style of investing is very consistent with what you've seen us do with CPJ and SVL and things like that. We're not about trying to gain control. We're not sharks. We're not those type of folks. We only step in if we think management is deficient. And I just heard Gary say that we think Kenroy and Trevine are doing a great job there. So I'll go out on a limb and answer for them to say, nope, I don't think we're interested in taking control. Could we deepen our position in dollar? Certainly. But I think we really like the direction that company is going in. Philip Burgess says, congrats on the CPJ deal. What are you going to do with all of that cash? So, Philip, you will be the fifth or sixth person to know. We're trying to hold on Mr. Berry right about now with that $2.3 billion of cash he's sitting on. I'm sure he's going to find some really good things to do with it. And
pay down debt.
Pay down debt up front, of course, but yeah, absolutely. And the thing about the stock market, and I've said it like 1,000 times, I'm going to say it again, guys. Did you see the inflation numbers? Again, 3 months in a row, inflation's within range. The government's clearly signaling that they're going to start to relax their grip on the monetary policy. I think interest rates are going to be trending down over the next 3 months. And you're going to see the PE ratios fly. And there are lots of companies who are going to take advantage of
sorry to interrupt.
Go ahead, Gary. Go ahead.
Sorry to interrupt, but that's actually the story for MJE and MGL for the quarter.
Yeah.
We kind of glossed over it, but, quietly for the second quarter, the stock market and certain stocks have put on, some incremental amounts of gain. And the reality is that, the impact for MJE, as you've said, is a couple $100 million, right? Well, more than a couple $100 million.
$900
So, and again, I keep repeating the point, right? MJE is the only stock you need to own, because the average investor would not be able to pick up some of these gains that you're seeing out there. By the time you hear about them, some of these stocks have recovered already.
Yeah.
So it's just so ironic that in one quarter, so many of the key reasons to own the MJE stocks are just playing out, right? We are realizing profit. B, we've sold a position at a premium, not just the market, but to NAV, and not just the NAV to however the stock is traded.
Yeah.
And then also, when most people think the market is in the doldrums, here we go again, just a very slight movement in overall indice, and Mayberry Jamaican Equities has benefited significantly. And the final part of the strategy, which people kind of alluded to a while ago, we kind of took additional debt because we thought this would be coming. We saw something like this. So we went and pre-purchased certain positions. So now that we've sold CPJ, we can actually pay down that debt because we've already taken the position. So we're now going to benefit even more significantly when you pay down the debt, because when you pay down debt, what falls?
Your interest costs fall.
Your interest expense falls. So we're just happy that the plan is playing out the way it is playing out, and it just shows you so many different facets and ways to benefit from holding the only stock you need to own, MJE.
I appreciate you. And it's still not too late, folks, to get it. It's still trading at a discount to NAV. That may not be the case for much longer. I think when the Q3 results come out, people are going to appreciate how serious we are, because we've got some good stocks, good positions, and I think they are poised for growth. Last question on MJE, and we'll move on. And this person's asking us, what's MJE's current outlook on Wigton, given they were pre-rewarded in the 100 megawatt generation procurement entity bid?
Like, really?
It's there. I swear to you, I didn't make it up. Didn't make it up.
I'll defer to the chairman. I thought that one answers itself. I mean, the fact that Wigton has been awarded this bid. I mean, I think it's pretty clear what's going to happen.
Good deal. So, as a board director of Wigton, placed there by Mayberry because of Mayberry's significant position as the largest shareholder in Wigton, let me answer that question, which is to say, Wigton has 62.5 megawatts of power, and they've just been pre-awarded 50 megawatts, which gives them the ability to grow their capacity by 80%. So I'm just going to say that. And then there's another 168 megawatt bid that's going to come out within the next fiscal year. And I would be
so Wigton can bid on that too?
Absolutely. And even if they limit us to 50 megawatts, I think there's
so what happens if they win? What happens if they win one of those bids?
I'm telling
you. As well.
Then they could grow by a further 80%. So it just shows you the potential for growth by Wigton. They happen to be sitting down on $3.8 billion of cash, just waiting for opportunities like this. And so I'm going to predict that within the next 12 months, Wigton will win at least another 50 megawatt bid or acquire something. They got to figure out a way to do something with that $3.7 billion. We interviewed the new incoming CEO, Gary Barrow, who has over a decade experience working in energy and more than 20 years before that working in the utility industry. And he has been charged with a mission of spending that money wisely and increasing returns to shareholders. So that's my answer.
Well, Dan,
without being
specific. I can give you some free advice. If you can't find anything to do with it, you could always pay a dividend or a much larger dividend.
Yes, absolutely. We will not have that $3.7 billion cash in 9 months' time. I promise you. We're gonna spend it or pay some handsome dividends. One of the two. Very few companies have 30% of their market cap sitting in cash, and that's what Wigton is. Can you imagine 30% of the market cap sitting down in cash?
What I can't imagine is why we're not getting more dividends.
Coming soon. But let us focus on the $50 million project for Wigton Phase 4. That's what we just spoke to. And then the $20+ million restoration of Wigton Phase 1. Wigton was awarded the right to replace its Phase 1 project, which is a third of its capacity, 20.7 megawatts. That PPA, which expired this year, was extended by 3 years, and Wigton will replace that plant and get another 20-year PPA. So this business is poised for growth and has good longevity in the form of long-term offtake agreements. So it's a great company. It's still good buy at 105, I think. It's still a great buy. And again, we're the largest shareholder in Wigton. That cap that used to limit the amount that any person could own to 10% has been removed, by the way. Just want to remind you, Mr. Berry. So people are free to buy substantially more and increase their positions in Wigton, and I will change my name if we don't see that happening in the next 6-9 months. I think we're going to see that happening. So congratulations on the results for MGE. I really look forward to coming back next quarter, because if the market barely move now, I think over the next 3 to 4 months, we're going to see the market skating. Skating. That's the term I'm going to use. Trying to stay current. Okay, up next, we want to take a look at MGL. So if you guys could find me the MGL results, I will happily speak to them. Thanks very much. MGL, it's next. Okay, they're saying, Dan, you're a dum-dum. Just swipe and you'll see it. And there it is. Okay, good. So MGL, I want to talk about the fact that its shareholders' equity is up to $15.9 billion, albeit a small decrease, 2% decrease from the prior year. And total comprehensive income year to date June was $278.9 million, and that's a loss. So we'll do a deep dive into that. And the net book value per share is now $13.25, and we'll certainly focus on what this NAV is relative to the actual share price. Next slide shows the profitability for the quarter. And so we see net income growing to $1 billion, net interest income for the quarter, up 278%. Operating expenses at $497 million, an increase of 6%. And that results in a profit before tax for the quarter of $554 million. That's substantial growth over the previous quarter last year, where they had a small loss of $190 million. And then we see a share of loss in a joint venture of $57 million. And then that results in a final net profit attributable to shareholders of $101.6 million. So actually, I see net profit of $497.7 million. And then the actual net profit attributable to shareholders of $101.6 million. So presumably there's some taxations and some other one-off adjustments going in there that I'm not seeing in this summary. Total comprehensive income, though, up to $681.7 million. And, oh, I get it. The total comprehensive income attributable to the shareholders of this company, because there's a minority shareholder interest, is $231.6 million, earning per share of 8 cents. Next slide shows the summary of movement in the financial position. And we can see here a good 8% growth in total assets to $63.5 billion. Growth in liabilities of 15% to $39 billion. And then we can see here net, there was a small 2% decrease in the shareholders' equity attributable to shareholders of the parent company, from $16.2 billion to $15.9 billion. So still substantial amount of equity attributable to shareholders. Total equity of the business before you take out the minority interest is $24.5 billion. So healthy level of equity and reserves. And the net book value per share, again, at $13.25, which is substantially higher than the share price. If we flip on to the next slide, we'll see the movement in the share price, which you can see. Again, I just spoke to a NAV of $13.25, but the share price is sort of bouncing around over the last year and a half between $8 and $9. So trading at a 30% discount to NAV. Again, doesn't really make great sense there. It means people aren't seeing the value. And hopefully over time, they will see the value. MGL, I want to remind you, is an approximate 52% shareholder in MJE. So a lot of MGL's results benefit from those of MGE, but MGL in its own right also is the owner of Mayberry Investments Limited, the brokerage firm. And that brokerage firm has been quite busy, and I think we're going to see some good gains from the transactions they have done. So, for instance, we were the broker on record for the CPJ transaction that transaction was closed in July. That's one of the larger transactions we've done year to date at over $5 billion. So you're going to see some good brokerage and commission fees coming from that transaction as well too. So net, what we see here is a healthy balance sheet with over $24 billion of equity. And shareholders' equity, although dipping by about $300 million, I don't believe that's anything for us to be overly concerned about. It seems to be just a result of the overall half year. But again, in the quarter, we see that they're bouncing back with $688.7 million in total comprehensive income. So, Mr. Peart, first question from me, you seem to have a little bit of a mixed basket of results for MGL. Tell us a little bit about what's happening in those financial results for the quarter.
Well, I don't really see it as a mixed basket. So the first comment I would make based on what you said, right across the world, it's very unusual to see a financial services stock trading below its book value. Mm-hmm. And one of the main reasons for that is, to break it out very simply, Mayberry Group has assets that are marketable securities. They either trade on the bond market, they trade on the stock exchange, or it's very valuable real estate that, the market is willing to pay a premium for. And so when your stock price is below book, what it is saying is that if we got up tomorrow morning and sold all the assets that we have in the Mayberry Group, we would realize $13+ a share, right? And, so therefore, if you're a shareholder in Mayberry now and the stock is trading at $7 or $8, if we sold everything tomorrow morning, you collect $13. So why would I sell something that's worth $13 for $7 or $8, right? And so again, saying it very differently, it's a matter of time before potential shareholders understand that, Mayberry probably is one of two companies internationally that's traded at such a deep discount to book, right? Especially when people understand the assets that we have. So that's the first one. I mean, this is a huge opportunity. But as I've always said to you, Dan, it's more time for us to raise cash to buy the stock, right? Because the value is going to come out at some point in time. The second point, the market has moved a bit, and we've seen this massive jump in our gains on the equities market, which is where our investment in MGE is. That's over 52%. Of that side of the business. As it pertains to our broker-dealer business, or a better word, Mayberry, we continue to move from strength to strength. As you pointed out, we've just secured the CPJ transaction, but also during the same period, we raised over $3 billion in debt instruments for MJE. We also did a raise for PBS in US dollars. So we have had several large raises on the debt market where we earn material fees, etc., from that business. And then we are also a very large player in the government of Jamaica 30-day CD market, where we give a lot of value to the average investor out there. So literally for as little as $20,000, you can invest in a 30-day CD. Maybe you can come through Mayberry. We earn a fee from it, and you get an above average return on your CDs, right? And so put it in perspective, because I like to dumb things down. If you put your investment into the average savings account, you get probably less than 1%. If you get into the average of the last 3 CDs, you're earning in excess of 9%, right? And when you get a CD from the central bank, you don't want anything safer than that. Because the central bank prints Jamaican dollars. It's also owned by the government of the country. So you don't have anything more secure than a 30-day CD. Yeah. And so that's an area where, we're encouraging a lot of corporates, we're encouraging a lot of individuals to come into that structure because it's easy money. As we would say, money for jam. You can actually increase your return almost 800 times, 8 times, you know, without and actually lowering your risk. Because there's no financial institution out there that has a lower risk profile than the central bank of the company. You know, so I think it's a credible result for the period. You know, we had a first quarter negative. We haven't totally wiped it out in the second quarter, but I think based on where the market is going, you know, we're seeing signals from the US market that the Fed is seeking to start the process of reducing interest rates. I believe that they're looking towards the end of September. I think once that process starts, it's going to rebound very well for Jamaica. We have had a little hiccup with Beryl recently, and then also the fact that Beryl impacted St. Elizabeth. So you might see some short-term inflation because of, you know, the potential increase in prices because of lack of vegetables and agricultural produce. But, you know, if the government is proactive and, you know, they import some stuff in the meantime, they can keep it relatively low. But I think, you know, once we get through that hump, you know, the stage is set. You know, once U.S. interest rates start to trend down, once inflation continues to stay within the 4 to 6% band here, I don't think it's a matter of if. I think it's a matter of when the BOJ will signal first that they're going to start reducing rates and then actually start reducing it. I think once we see that, I think the market, especially the stock market, is going to do phenomenally well, which would increase the returns in MJE and ultimately assist with the returns on the MGL side. You know, so as I said, creditable performance for the second quarter, and looking forward with bated breath for material improvements for the third and the final quarter this year.
Great, thanks for that, Mr. Peart. One or two additional questions. We see you having a share of loss in a JV during the quarter of about $57 million compared to a substantial gain same time last year. Could you expand on that a little bit for us?
Sure. That's our investment in Chalmers. So last year we completed the building, and with a completed building, we got the valuation uptick on the completion of the building. So this year, you know, we are preparing to invest further. Also, we're in the process of selling that building and tenanting that building. You know, so during the quarter, the costs associated with all those activities came through and impacted our P&L. But as you have known, Dan, this is the second building that we've built. We built the first one, leased it up, sold it. We're going through the same process with the second building. And the expectation is that, you know, once we find a solution on that, we will continue the process of continuing to develop that piece of property. I think we have developed probably about 5 or 6 acres to date. We have another 20 odd acres to develop. So, you know, we that's another investment and diversified aspect of the Mayberry business that does quite well.
Yeah, very good. So to be clear, Chalmers is us talking about the old Cable and Wireless Sports Club on Chalmers Avenue off of Malliance Road. It's a 32-acre property. You've developed about 5-6 acres so far, sold one building, in the process of selling a second building, and your JV partner is Mustins Group, none other than P.B. Scott, who you just happened to do this A.S. Bryden deal with. Is that roughly correct?
That's correct.
Okay, great. So we look forward to seeing bigger and better things coming out of that development. It's a great property. I went there for the first time 2-3 months ago, saw that second massive 100,000 square foot 5-story building and the potential for future development on the remaining approximately 25 acres of land down there at Chalmers. I can see a dream commercial complex. I can see 1 or 2 residential towers down there. It's a great property. Great development. So we really
to add to your point, you know, Dan, you know, one of the things that we can contemplate, you know, because we have so many opportunities on our table, you know, we could actually package a piece of that property and float it for other investors out there to come in, you know. So if you have other smaller shareholders, you know, we could probably package something there because it's prime real estate property, you know, and, you know, we like to share in value creation, and that's an opportunity for smaller investors or even larger investors to come in, you know. So that's something we can contemplate as well. You know, we don't have to take everything for ourselves. I mean, it's not a problem to have other partners. And, you know, we've benefited significantly from carrying very good assets to the stock market. So you never know. We could probably package something and carry this to the stock market to show you a different way to diversify your portfolio. So
Yep.
real estate development, I don't think there has been any major entrepreneur that has done it. And, you know, maybe there's an opportunity for us to be the first to do that once again.
Yep, I like it. It's kind of like how you spun off MJE outside of Mayberry, and now it's
Correct.
created over $25 billion in value. Amazing. Here's an amazing property. And yeah, I like the idea. You know, I've watched real estate down there over the last 4 years grow from 600,000 US dollars per acre to currently 1.25 million US dollars per acre in US dollar terms. So there's no doubt in my mind that it has great potential for future growth. And, you know, perhaps if we raise some funds in the way you just described, Gary, we could sort of expedite that development. So I think it's a great idea. I'd encourage you guys to pursue that course of business. Mr. Berry, sir,
Yes, Dan.
how do you sleep at night? Are you not worried about the silly season coming up between Jamaican politics and U.S. politics? Is there any aspect of this that we should be concerned about? You know, a lot of people, you know, are concerned about what could be coming up to the financial markets, to the capital markets, et cetera. Do you have any concerns in that regard, sir?
Not really, Dan. I mean, you know, when I think about Jamaica and how underdeveloped Jamaica is, although there may be global headwinds, I think if we really focus on some of our weaknesses and some of our strengths and really put energy behind them, Jamaica can grow at 5% per annum for at least 20 years before we run out of growth. Right now, I'm in Amsterdam. I travel all over the world, and when I come back to Jamaica, you know, nowhere not sweeter than yard. So, you know, it's a great place for investment and expansion. And I think, you know, we're getting better at it in Jamaica, but we need to, you know, have more strategy and focus, and we will see the benefit.
Thank you for that, Chairman. I'm definitely inclined to agree. Just think about Jamaica and all of the development we're seeing around us, the great macroeconomic performance in the last 7 to 8 years. And then look at the stock market and think to yourselves, there are less than 100 companies listed on the stock market between, you know, major and junior stock market. And for a country of our size and with growth potential, especially when we think about granting access to capital and what the junior stock market represents in terms of tax incentives, and now we're looking forward to the increase in the threshold to $750 million. There's no reason in my mind, Chairman, that we shouldn't have another 100 companies listed on the market. And so that's great opportunities for us as investors, for folks in small to medium-sized businesses to come to market, raise cheaper sources of capital to continue growing their business. So again, with less than 100 companies on the market, I think there's so much room for growth in the markets, and you know, for Mayberry to participate in that growth, which is something we enjoy doing, looking for the win-win-win, as Gary always says. Good deal. So let me jump to a few questions coming in from social media. The first question is partially redundant because we just talked about it. Philip was asking about the Chalmers JV and what's that model? Is it a rental income or is it a development and revaluation and sell model? So Philip, I think we've sort of explained we're in there as developers, and our objective is to develop the real estate and eventually sell it. We're not really in the business of long-term rental or leasing. And we've been taking our time down there, have completed 2 buildings, and used up 6 acres of about 32 acres. But we're definitely going to be thinking about how we can expedite the development down there. We think the property values have really come into to their own, and we think it's a great location. And so I think we're going to be looking to accelerate our development speed down there. And Mayberry Group Limited will continue to benefit from the growth and values that we create as joint developers down there at Chalmers Avenue. Next question coming in. Mayberry rules the JSE public bond market now. Will you bring more bonds for other clients? And how can you, as a broker, encourage more trading on that market going forward? Gary, maybe for you?
That's one of our key strategic objectives right now. And we want to start with our own bonds. And so we have Bondberry that's there. We have MJE that's about to be listed. And we're developing a model which will actively increase the amount of liquidity. So, they've always said passing Chris and then pick me first.
Yes.
We want to build a liquidity in our own bonds, and bonds issued by us or supported or brokered by us. And I think that will then create the buffer to move to other bonds out there. So that is something we're actively looking to move forward with, because we think that's the next level to boost our fee income at Mayberry. We have relatively good fee income in the equity markets. And as people would know, the bond markets is usually 10 to 1,000 times, 10 to 100,000 times bigger than the equity market. So if we can get the liquidity going there, we should be able to attract quite a bit of fee income from that.
Yep, agreed. And incidentally, congratulations, Mr. Berry. We did, in fact, list the MJE bonds on the market. The actual ceremony will follow, but those bonds are now trading on the market, and we definitely hope to become more active in promoting that market. Philip, take note. I really do feel that over the next 3 to 6 months, we're going to see interest rates trending down. So while Gary mentioned where 30-day CD rates are at today, I'll bet my bottom dollar in 3 months' time, they won't be at 9%. And at 12 months' time, they will be nowhere near to that point. And so as interest rates are trending down, these fixed income bonds that we have on the market, we think there'll be great opportunities for people to trade them and get into them to improve their yields. So we think it's going to happen over time as interest rates trend down. That'll make these bonds, these fixed rate bonds, far more attractive. And I think the trading is going to start to come, Philip. And yes, for sure, we're definitely going to be listing more bonds of our clients. We're always actively encouraging our clients to list the bonds to give better liquidity. So we did that for Express Catering Limited, where we did a $12 million bond in February of this year. We just raised $3.3 billion for MJE. We just closed the $17 million US preference share for PBS, and we're going to encourage them to list that. I think we'll see that list within the next 90 days. And I've got about $50 million US dollars more worth of bonds that we're going to raise for the rest of the year. And in most strategies, Philip, we're encouraging folks to list the bonds on the market to give better liquidity to those bonds. They won't always be public bonds. So, for instance, the PBS AS Bride Intercom will probably be, to accredited investors only. So there's something unique about ECL and MJE, since those were done as bond IPOs, which means they're available to the average investor who's just simply buying stocks, as opposed to accredited investors where the take-up threshold is a minimum of $1 million. So we'll be doing a bit of both, trying to democratize investing in these types of things and making it available to the ordinary man. The number one thing I want to say, and there's like over 600 billion of you people out there, if your money is sitting down in a savings account earning you 1%, you are underwater. You're not even keeping up with inflation. You need to actively start to invest your money in bonds or 30-day CDs, like Gary says, or putting it into some kind of money market fund. For instance, Mayberry has several money market funds where we will then diversify your investment into a combination of corporate bonds, government paper, etc. And you will find yourself therefore moving your earnings from 1% to closer to 5 to 7% range, while still having great access to those funds in terms of liquidity. So I encourage you guys, You know, my mom used to say it's not what you earn, it's what you save. I want to just twist that. It's not really what you save, it's what you invest. If you're saving in a savings account with an NCB or BNS, sorry to call names, or any of the commercial banks earning 1%, you're doing yourself an injustice. You want to keep emergency funds there. But other than that, you need to be investing your money, not saving your money, investing it. If you're not earning 5 or 6% on your fixed income instrument, you're not even keeping up with inflation. So very important to note. No point parking money in a savings account for 1 year, 2 year, 3 year. It's losing value every day. So please bear that in mind as my one tip of the day. Try to get into the habit of investing your money. And if you're not yet comfortable with equities, which should be 20 to 30% of your portfolio, then I pray get into some fixed income instruments. Either way, I want you guys investing, not just saving. Savings is just the means to the end. End has to be investing. And we want to get you investing ideally in real estate, in bonds, and in equities. I'm more in love with equities at this point in time in my life, and it makes up maybe 40% of my investments because I just think that's, you know, where the market is. And over the last 7-8 years, I've seen my equity portfolio up by 180%. So, you know, nothing comes close. And this is even with the portfolio down. This is even with me holding NCB at $52 that I bought on average for $80. I'm not worried. I know in the next 6, 9, 12 months, it's going to bounce back. I think in 12 months' time, I'll be up by 30, 40% to what I bought it at. Relative to where it is today, I think it'll be up by 50 to 80%. So I think equities are the way to go. There are only 2 ways really to go if you really want to create generational wealth, and it's usually in real estate or in equities. And you know, you can't buy $500,000 worth of real estate these days, but you can buy, you know, $100,000, $200,000, $300,000 worth of equities. So that's why I like equities a little bit more, because to get into the real estate, you usually have to have, you know, stronger purchasing power. So start with the equities, build up your portfolio, and when that portfolio gets to be big enough, then you get into the real estate. True story, in 20 seconds, I helped a good friend start his portfolio, $3 million 5 years ago. He wanted to buy a house. That $3 million jumped to $6 million in 2.5 years. And 2 months ago, we made his down payment on his first house. So congratulations to my friend. You know who you are. I'm not going to call your name. I don't want to shame you, but this is a true story. Helped a friend buy his first piece of real estate. Started right here at Mayberry, investing in equities. So it's a good way to go. Okay. Any more questions coming in? How's the pipeline of IPOs for Mayberry? The market's hungry for Mayberry IPOs. So, Philip, we've got a great pipeline of IPOs. I've got at least 6 in the making. We're just waiting on them to incubate. The gestation period is a lot longer than people actually realize. You know, the average client that's looking to go public with us is typically with us for anywhere from 12 to 18 months while we make sure everything is right, that they develop the muscle of reporting their quarterly results, getting their audits out on time. It's so important for our clients to be able to produce their financials on time. I mean, we've seen giants like PBS shares suspended because they didn't produce the financials on time. So that's one of the disciplines we like to see. We like to spend a good amount of time looking at the business, looking at the financial results, having them forecast what they think they're going to do quarter by quarter for the next 12 months, 15, 18 months, and then watching how they perform against that so we can see if these things are tried and tested. So I've got 6 in the pipeline at various stages of maturity. We'll start flying the gate at the appropriate time. I think you'll certainly see some stuff coming. I think the market's going to be really crazy next year. I'm going to predict 2025 we'll see over 15 IPOs in total. I think 2025 is going to be a great year for the market. I think the market's going to start to turn in the last quarter of this year, mind you, but I think 2025 is going to be a record-breaking year for the GSE. That's what I'm predicting, you know, barring natural disaster or something huge. That's what I'm predicting, and I look forward to seeing that come forward. I'm not going to answer that question, Gordon Allen. What's your plans for the CPJ proceeds? That's for Chairman Berry to know and for us to find out in due course. What I can say is tune in. You'll get a sneak peek as to what he did in Q3 2024, but we can't give away the trade secrets now. But
Well, what I can say, Dan,
let me
what I
let me tell you, let me say what I think you're gonna say. What you can do, Gordon Allen, is buy some MGE stock because it's trading
yeah,
at
that too.
35% discount. So if you get in on MGE at $9.50, when the big man makes his big purchases and it manifests itself, you would have been a part of the deal. Gary, what were you gonna say?
I was going to add, in addition to MJE, the only stock you need to own, that when you're an entity with excess liquidity in an illiquid market, patience is key, and patience will bring tremendous value.
Amen to that.
Don't be too quick
I
to give away your liquidity in an illiquid market.
Well
The
said.
market will come to you.
Well said. Well, gentlemen, I don't want to drag it out. Chairman Berry, do you have any final comments or thoughts of wisdom that you would like to share with us in relation to MJE or MGL, sir?
Slow and steady wins the race.
Every time, every time. Mr. Peart, what about you, sir?
Patience. Patience with your liquidity in an illiquid market. The value will come.
I like it, sir. And I wish you both the best on your travels. Let's big up Jamaica. Let's go for gold. Sorry to hear about Shakira that she won't be running in the 200 meter. Did I get that name wrong? I probably messed it up. But
Shakira is the one with the hips.
Yep, Shakira.
No, but yeah, I wanted to, Dan, if you allow me, I just wanted to big up the Jamaican Olympic team. Mayberry has been a sponsor for the Jamaica Olympic Association for several years. We've been proud to be their investment banker of choice. And, we just want to use this opportunity, to tell them to give up their best. We all want gold, but a medal is good enough.
Absolutely. And for those who do get gold, Gary, track them down. Tell them that they need to come to Mayberry. Dan Theok is personally going to help them open up an investment banking account at Mayberry. I'll do something special for everybody who wins gold, for sure. I'm going to do it. I want to see these guys investing their money. I want to give a special big up to one of my favorite long-term athlete clients, Johan Blake. Johan's been with us for, over half a decade. He's done really well in his investments. Sadly, we see him sort of retiring from the sport, but his contributions have been invaluable. And as an investor, it's great to see athletes investing their money. So all who get gold, remember to come to Mayberry. I will set you up. All right. Well, guys, it was a great program. Good to see the results from MJE and MGL. Keep them up. In the case of MJE, I look forward to the next quarter and seeing what Mr. Berry does with some of that money. In respect of MGL, I look forward to the next quarter to see what deals they've closed and what further gains they've made. We'd also like to see if we'll see any further developments with that beautiful property down at Chalmers. We look forward to seeing some more IPOs. Philip says the market is hungry for Mayberry IPOs. So with that, I want to thank Mr. Berry and Mr. Peart for their invaluable contributions to today's program. Safe travels, guys, as you make your way back to Jamaica. We know nowhere is better than Yard. Well, that's it for today's discussions. Special big up to Chris and Gary for their great support. Thank you, Chris. Thank you, Gary.
Welcome.
Thank you. Bye.
Okay,
Bye,
folks, if you're curious about future updates on our Virtual Investor Forum, then find us as usual on social media. We share our live stream dates and our upcoming guests on our social media pages. So give us a follow to learn all things forum related. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Remember, wise investors, slow and steady wins the race. Keep safe, everybody.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.